Ladies and gentlemen, buckle up. Because what just happened in the United Kingdom isn't just a local financial crisis, it's a thunderclap warning for the entire Western world, especially the United States. Yes, the British bond market has collapsed, and if you're thinking, so what, it's Britain, let me stop you right there. Bond markets aren't just technical graphs for nerdy economists. Bonds are the beating heart of modern economies. When they collapse, confidence collapses. And when confidence collapses, governments fall. And make no mistake, what's happening in Britain today is the canary in the coal mine for Washington tomorrow. Now let's break it down. The UK bond market meltdown didn't come out of nowhere. Investors saw this train wreck years ago. Britain, like many Western economies, is drowning in debt, juggling impossible fiscal promises, and now trapped in a death spiral. The UK's debt-to-GDP ratio has hit 100%. That means the entire annual economic output of the country is equal to its national debt. For context, imagine working an entire year just to pay off your credit card interest and still being broke. That's where Britain stands. But here's the kicker. Unlike the United States, Britain doesn't issue the world's reserve currency. There is no global demand for pounds like there is for dollars, which means Britain can't simply fire up the printing presses without sending inflation into the stratosphere. And that's why we've seen British bond yields explode. We're now at 5.7%, the highest level since 1998, a 27-year high. To put that in perspective, the UK hasn't had to pay this much to borrow money since before most of today's TikTok generation was even born. And when yields rise, two things happen. First, existing bondholders lose value, massively. Pension funds, insurance companies, hedge funds, billions wiped out. Second, the government's cost of borrowing skyrockets. Britain now spends nearly 8% of its £1.3 trillion budget just on interest payments. That's more than double pre-pandemic levels. £1 out of every 12 goes to interest. Not hospitals, not schools, not defense. Just interest. And here's the horrifying part. Interest payments alone are now 4 times greater than Britain's entire GDP growth. 4 times. That's not a budget problem, that's fiscal cancer. It sounds insane, but the whispers are getting louder. The UK might actually need a bailout. Yes, the International Monetary Fund, the kind of rescue package we associate with crumbling economies like Argentina or Greece, could soon be knocking on Britain's door. Just a decade ago, this would have been unthinkable. Britain, a G7 country, a nuclear power, begging for IMF relief. But today, investors aren't laughing. They've already lost faith. The pound is tumbling. The bond market is in freefall, and the fiscal options are closing one by one. Here's Britain's impossible choice. They can raise taxes, but that crushes private spending and kills growth. They can cut spending, but no politician wants to torch social programs or slash public services. They can borrow more. But bond yields are already surging and investors aren't lining up, so they do a bit of everything. A half step here, a token gesture there. And the result? The country gets trapped in what economists call a doom loop. Higher yields, higher interest payments, bigger deficits, more borrowing, higher yields again, round and round until the system breaks. And let's not forget, Trump's trade war is making this even worse. That 10% baseline tariff on UK exports to the US, it's hammering British industries, firms are shutting down, tax revenues are falling, the government's budget hole is widening, and the more the pound falls, the more expensive imports become. Inflation ticks higher, the cost of living rises, manufacturing costs surge, it's a death spiral. When bond markets collapse, currencies often follow, and that's exactly what's happening. The pound sterling just had its worst day since June, crashing more than 1% in a single session. Traders are piling into bets that the Bank of England will have to intervene, maybe even fire up quantitative easing, printing money to buy bonds and push yields back down. But let's be honest, that's just kicking the can. Printing money when confidence is gone doesn't rebuild faith, it accelerates collapse. And speculators know it. Options markets are filled with traders betting against the pound. Think about that. Even as Trump pushes the dollar down with his tariff war, Britain is managing to destroy the pound faster. That's not just bad policy, that's historic incompetence. Now let's zoom out. Because here's where things get terrifying. This isn't just Britain's problem, this is a preview of America's problem. The US Treasury market, the foundation of global finance, is already flashing the same warning lights. Yields are climbing. The 30-year Treasury is on the verge of breaking 5%. That's a level that would send shockwaves through Wall Street and Main Street alike. By the end of this year, $6.4 trillion in US debt will need to be refinanced. Trillions borrowed decades ago at low interest rates are now maturing. And to keep the game going, Washington will need to issue fresh debt, at today's much higher rates. That means one thing: America's interest bill is about to explode. Already, U.S. debt is growing at an insane pace. Over the last 48 days, federal debt jumped by $1 trillion. That's $31 billion every single day, almost $1 billion an hour. Wrap your head around that. Government spending is now close to 50% of GDP, the highest since World War II. And unlike World War II, this isn't financing victory, it's financing dysfunction. Like Britain, America faces two doors. Door one, fire up the printing presses, launch another round of QE, push yields down with Federal Reserve magic. But the cost? The dollar collapses. A 20–30% devaluation overnight. Imported inflation. Crushed consumer confidence. Door two, slash spending. Cut everything from welfare to the military. Tear billions out of the federal budget. But let's be real. No administration has the political will to do this. Not Biden, not Trump, not anyone. So what happens? We drift, we kick the can, we borrow more. And just like Britain, the doom loop tightens its grip. Now Trump argues tariffs will save the day. In fact, he brags about record tariff revenues, $31 billion in August alone. $500 billion in a year, he claims, will patch the deficit. But here's the reality. That money isn't coming from China, it's not coming from Europe, it's not coming from Mexico, it's coming from you, from American importers, from American consumers. Tariffs are just a hidden tax, a bailout of the government by private citizens. And while Washington celebrates, the private sector bleeds, capital is destroyed, growth slows, and the debt machine roars louder. And it's not just Britain and America. Bond yields are spiking across the G7, Germany, Japan. Even stalwart economies are struggling to keep investor confidence. Investors see the writing on the wall. They fear inflation isn't going away. They fear currencies are heading for decades of devaluation. And they're demanding higher returns to lend. This is a global sovereign debt crisis in the making. And Britain's collapse is the first domino. So let's cut through the noise. Britain's bond crash isn't just a local story. It's a flashing red light for the entire Western financial system. If it can happen to Britain, a G7 economy, a global financial hub, a nation with centuries of credibility, it can happen to anyone. And that includes the United States. The day of reckoning is coming. Maybe not tomorrow, maybe not next year, but soon. You cannot borrow and spend endlessly without the bond market revolting. And when it does, no reserve currency status, no central bank trickery, no tariff gimmick will save you. So I'll leave you with this. Can Britain crawl back from the brink? Or is this just the first act of a much larger financial collapse? And when the hammer falls on U.S. treasuries, will America survive the same doom loop Britain is now trapped in? Tell me what you think in the comments below. Do you believe the U.S. has time to fix this mess? Or is the collapse already baked in? And if you found this breakdown useful, do me a favor, smash that like button, subscribe for more deep dives, and share this video with someone who still thinks debt doesn't matter. Because the truth is, it matters more than ever.